Hello everyone, Jose for Farouk speaking. Thank you for watching the video. Today's video we're going to be going through the NASDAQ and the FDAX. Just for the past couple of days, we showed you the last week's results. This simple technique you can employ every single day using pretty much any single futures market. We prefer trading the NQ and FDAX until we come out with optimizations to the strategy that will enable you to trade the S&P, which is symbol ES, and the crude oil. Okay, sorry for my writing, but the symbol CL. Now we are coming out with these upgrades and optimizations to our strategy, so you will be able to follow a rule-based system with the ultimate Renko and trade this. So first, let's go through the NQ starting from Friday. Now, why Friday? Friday is the day where there's most chop because there's less traders bringing in volume for a smoother ride in the market. Everybody knows this, at least every professional trader knows this, and you will learn this too once you employ our strategies. As you know, we trade between 8 a.m. We don't take trades only after 8 a.m. till maximum 12 to 1 p.m. Okay, now we trade one trade per day. That's it. That's our rule, and that's it. Okay, our profit target is 8 ticks. And our initial stop loss is 14 ticks. Okay, now that 14 ticks gets cut down as soon as the price moves into your favor at a certain tick point, and we show you that in our training. So that 14 ticks, it goes down to 10 ticks after the first initial few ticks in your favor. It goes down to 10 ticks, you bleed out your profit, and then immediately after it goes down to 4 ticks. Okay, even before your 8 ticks hits. So in the first few ticks itself, it goes down to 2 to 1 risk reward ratio, and your trade is pretty much a safe bet. Now there are times you're going to lose, and you might lose 14 tick trades. That's fine, but remember, there are multiple opportunities in the market, especially in the morning, and we're going to show you just that in a moment. So let's take you through the first trade here. Now we have a few trades. One of them is this wave trade. Okay, and this is called also a range bound trade. How do you define a range bound trade? Is by these lines here. When these lines here, this dashed line starts going horizontal, we'll see and watch the price move back and forth like this. This is more of a range bound. You only take these trades when, remember, this line is as straight as possible. And look at here, it's straight just like this. Okay, I'm not saying there's a trade here, but I'm just trying to show you an example of when the lines are horizontal, and that's pretty much horizontal. So what you're looking for is bounces off the median, so it bounces in between that line. So here could have been your first trade right at 810, would have been your first trade off of this right here. So what happens is price goes back to a point before where it turned around. It turned around right here. Okay, so it came up here and it bounced off and it turned around here. What you're looking for is for price to come back to that area. Okay, and also what you're looking for is for this white candle to appear. Now all the rules, conditions are met. Rule number 1 is horizontal line. Rule number 2, it's pivoting off, it's breaking through that line and coming back. And rule number 3 is you're waiting for the white candle to come down this way. That's our range bound trade. You're looking for 8 ticks. All right, now 8 ticks might seem like nothing to you, but believe me when I tell you, it adds up to a lot of ticks once you start going and doing this every single day. Now we haven't even got to the FDAX yet, where you're making $15 USD per tick. Okay, so your entry would be here. Sorry, where was I? Sorry, wrong area. Your entry would be here. Profit target is right here, and that's it. As soon as this price gets to 2 and it forms this number 2, you bleed your risk out down here. Okay, you put your stop loss from up here down to here. Okay, you take out your risk. Okay, your risk is virtually 2 to 1. In fact, it's 2 to 1. So that's the first trade. Now another trade is right here, right off the pivot. This is called a 89 EMA bounce. Okay, that's our 89 EMA bounce. When a tail hits this, and you see this candle, white candle, and there you go. So if you had missed this trade, you can take this trade. All right, that's our second trade. Now this is a Friday, this is a choppy day, and here's another one. Now this is a Clarity Diamond trade. Clarity Diamond is basically a tail off of either this dashed line or this line with a Clarity Diamond. Now this arrow paints in real time. I don't know anywhere you're gonna get a real-time arrow painting on a Renko bar. All right, this is not any regular. This is a sim Renko bar with a customized, optimized formulas and algorithms to paint the way it does here. All right, now this is a Clarity Diamond trade, and there you go. Here in your profit. That's 3 trades, and we haven't even been in the trade for 40 minutes, the market for 40 minutes. All right, now again, we only trade once a day, but I'm not going to keep repeating myself. Maybe I will, but I'll decide while we progress onto this video. And then you keep on going. Now why isn't this an 89 bounce? Because these swing dots here, they represent when you should not be taking an opposite trade. This is a swing dot right here. So once price breaks that, what that's telling you is you're looking for upward movement now. All right, not immediately. You want to be careful. More experienced traders would take this to the upside. Beginner traders would not take this trade because it's going against the trend. Okay, it's under this dashed line. So beginner traders would not take that trade. So what you want to do is you want to wait for the next trade if you're a beginner trader. Wait for the obvious signals. You only look for 1 trade per day. Obvious one is this offer right here. All right, now this is a 34 EMA bounce right here. When the tail hits this EMA, just like that, it looks exactly like that. It just happens every single day in the market. Every single day. You enter here, here's your 8 ticks. And there you go. And remember, we're not even taking these trades. We've already had our trades. No losing trades so far, just winners. And you continue on with your day. And then there it is again, straight horizontal line. Okay, the same thing happened here is happening here again. This is going this way. You're waiting for price to bounce. And what happens? This price did not get here, so there's no trade, but it did get here. All right, and a white candle painted. You enter here, exit here, and you're good to go. All right, over and over again. So even if you had lost 1 trade, 2 trades, which I don't know where you would have lost if you would have lost if you're not following the rules, but if you had lost, you would have been able to make it up by now. All right, and I easily can tell you once this breaks, this is going to pivot off the EMA, and there's your 8 ticks again. Right here, enter here, exit here, there's your 8 ticks. That's about 5 trades, 40 ticks in total so far we've taken, and we're just, yeah, and this is, even if you trade 1 contract, that's $200 already. All right, and then you just keep on going over and over again. There's no trades here. Okay, so that's the 13th. We could just go on and on, but I want to get on with not only this, the 16th, which is today. I also want to talk a little bit about the FDAX as well. Okay, so your first trade would not have happened until right here. Okay, now this came close to a loser, and I'll tell you why. This came all the way up here and touched your stop loss. It touched it. But remember, your stop loss is right here, 1 tick above the tail. All right, but eventually it went down. Now this was a legitimate trade. Why? Because number 1, it broke this support. Price went down and broke this support. This is support because it went up, went down, and went this way. So it broke that support and it retraced. The only reason why this would not be a qualified trade is because the retrace, this is a retrace right here. When it breaks and it retraces, you only want it to retrace a maximum of 3 bars. Okay, so if the 3rd bar paints, good. But if the 4th bar paints, that's too big of a retrace. The only thing that validates this as a trade is the Clarity Diamond off this thing right here. But you won this trade because it touched your stop loss and went back down. All right, now remember one thing, guys. You've seen in my videos, I have not let me just start again. You've seen in my videos that I usually get in at better prices or the same price, usually. Why? Because I don't place stop limits. What I do is I get in usually when the price hits that and then tries to get a little better in the price, and then I hit it. So usually you get a price around here, and then you want 14 ticks above there. So usually, even though the rule is to put it 1 tick above the tail, if you get it at a better price, you can put your stop loss even higher, meaning you still have the same 14 tick stop loss. Okay, so let's look at more opportunities that would have occurred in the market. And so far, nothing, but we have a break of this resistance up here and it bounces off this point. So this is a potential trade right here with an 8 tick profit target right there. Okay, now, let me go back here. Why would this not be a legitimate trade? So we have a 3-tail pattern here and we have a clarity diamond. The reason why this would not be a legitimate trade is because there was no support that was broken here. Okay, if this had broken and gone down, then it would have been a trade if it retraced back up a little bit. But there was nothing here. What this indicates to us is that this is ranging, so it's going back and forth off this pivot. Okay, so what that tells you is that there's no evidence this is going to continue down. You want evidence that this is going to continue down. Even though you're only taking 8 ticks, you want evidence this is going to continue down. Okay, that's why this would not have been a trade. Just for those who are wondering, that's why. Now, this right here breaks this swing dot right here, goes up, retraces for the minimum maximum of 3 bars, and you get in here and you get out right here. All right, so there's your profit right there, and there you have it. See, just like that. So this breaks, this retrace was too high, so this trade is invalidated. All right, so there's no trade here because the retrace is of more than 3 bars. All right, hopefully you guys are getting it. Those, especially those people that are new, hopefully you guys are getting it. Now, here's another trade that you could have taken right here. Break of resistance right here. So this price went down here, break here. This is the break point right here. You have to wait for it to retrace, take the first white candle up, and there you go. There's your profit target. All right. Now, arguably, you had about 1 losing trade somewhere over here. All right, but you had about 6 winning trades that we've already gone through. All right. Now, this is a 3-tail diamond pattern. Now, the reason a 3-tail diamond pattern happens is consolidation, and 3-tail pattern happens especially around the horizontal line. Okay, now remember, this is the horizontal, so you have not only the 3-tail pattern, but you have a horizontal ranging trade, because now this pattern has gone like this, so you're waiting for price to go here or here for you to take a trade. All right, so this right here is here to here, and you're winning 8 ticks. Right, so this right here, you would have taken it right here, the trade at 74.05, taken some heat, it wouldn't have touched your stop loss, and you would have gotten out right here. All right, and here's another break of support, and you get in. Here's a break of support, retrace down. All right, you only need 8 ticks, guys. You only need 8 ticks, and you're good. All right, you're not looking for big moves here. People who look for big moves, some are successful, some are not, but scalping is the most efficient use of trading because you're in and out of the market almost immediately. All right, so here's a nice break that I want to show you right here. See, this is support, break support, retraces, and booyah. You get in right here, stop loss safely tucked here, and your target is right here. Within minutes, you're in and out of the market. So I also wanted to take you through the FDAX, and I just wanted to take you through one day just because this video is taking long. But again, the same rules apply. 8 to 12 p.m. we take trades only, even though the FDAX trades during the middle of the night in Europe because it's a European-based index. You can still trade this thing 8 a.m. to 12 p.m. Now, this is my primary source of income is FDAX and NASDAQ. Now, It used to be other things such as crude oil and S&P, and it will be testing, so we'll be going back to it. But right now, NASDAQ and FDAX has been paying my bills. So our first trade here happens after 8. Now, there are no trades here until you get right here. Now, why is this a trade? For 2 reasons, and you've seen this trade over and over again. Number one, it breaks support. So this is big evidence right here. It breaks support, and you're waiting for the retrace. There's the retrace. All right. Number 2 reason is it's tailing on the EMA. Okay. Now watch how it tails on the EMA, especially when it breaks resistance or support. It tails on the EMA here too. Okay. It broke resistance here, tailed on the EMA, and boom. Okay. So you have countless opportunities here. Now each one of these moves is $200. Okay, on one contract is $200. All right, US. So take the FDAX seriously. Study these markets, especially when you join TradeSimple. Now we have a new site that's already up, and we want you to go check it out. The site is tradingsimple.ca. Now link is in the description. So we have new monthly plans that you can use and try out the Ultimate Renko system. A lot of people go to our website, you'll see a lot of testimonials and results of our strategy and how it's been working for people. And truly, I see a lot of opportunity here for a lot of people to quit their jobs if they need to, especially if they find success in this. Now, we not only offer the Ultimate Renko system, I want to emphasize that the education is very important with our system. So go to our website. We have a full course available for trading Forex, how to trade Forex. If you have completely no idea how to trade, we take you through the very beginnings of how to trade in very simple, short videos, and you'll be up and running trading with NinjaTrader, any Forex market, and futures like a pro. And you can use our many strategies and indicators for your needs. So hopefully I see you guys in the next couple of days for another video. Hope you guys liked this. If you did, please like and subscribe and support our channel. Thank you very much. Have yourself an amazing day.